Hi guys, James here at Miss Soul Car Finance. Today I want to speak to you about negative equity and how that affects like the mis-selling of cars, etc. So the first thing is negative equity, to explain, is really when you want to maybe go and trade a car in and the car's worth perhaps £3,000, but your finance settlement on it is maybe £4,500. So you find yourself £1,500 adrift. So technically what you should do is either sell your car, clear your finance, and that's you're fine to go and buy another car. More often than not, you'll go to a garage and they'll value your car at £3,000. But what they'll say is, well, your car, there's a settlement figure of 4.5 on it. So there's one or two things they'll do. They'll either inflate your trade-in to £4,500, and that way you think to yourself, well, I'm getting a great deal on my trade-in. And again, it's back to this rouge. It's a bit of smoke and mirrors, and you become a bit confused as to, am I getting a good deal on the new car, or are they giving me a good deal on my trade-in? So again, we say there's a lot of smoke and mirrors, and sometimes just exactly from that point, that's where the rouge starts, and it can be misleading, and the kind of smoke mirrors and stuff like that. So straight off, you get your car, you get in to buy your new car, and they've given you this inflated price, and what they'll say is, well, we'll just roll the £1,500 maybe into your other car. Now technically that's not correct either. They should not be rolling any negative equity into another car. They should be setting up what's called a top-up loan for that £1,500, and that should be separate from the finance of the car you're buying. So that's the first thing when you get into a dealership and they do that. That's the first point, and you've got recourse with them if that's what they've done. So if you just wanted to, obviously when you get at that point, you'll say, oh, listen, it's not a problem, we'll deal with that later on, and we'll just roll the negative equity into your car. And you think to yourself, well, that's great, I really didn't want to pay that £1,500, I was struggling a wee bit. So 3 years down the line, you've had that £1,500 that you rolled in, you come to move your car on that you've now bought, and you find you're in the exact same position. So that wee problem of £1,500 you had is now turning into a bigger problem, because the car you've got is, again, there's a bit of negative equity in that. So you're looking at maybe another £1,500. So 3 years on, you're now facing a £3,000 problem. And but the dealer will chat away to you and say, right, what we'll do, don't worry about that, what we'll do is we'll roll that into the next car. So you kind of see this developing, it's kind of rinse and repeat, and you think to yourself, I'm not going to get into that position again. But guess what? You find yourself same position. It's day one, you want to get another new car. You buy that car, you're now, £3,000 in negative equity on that car now. So you know exactly where you're heading. You're in another car, as I say, rinse and repeat. You're going to do the exact same as you move on. At one point, you will get to the situation where you've another 3 years down the line, you're £4,500 or more, and you've now got a bigger problem. You can't get finance in a car, and you're just going to end up with no car and not be able to get finance on a car because you're that much in negative equity. They can't roll it into any other cars because it's just blowing the figures too much. So this is a really common thing within the motor trade, and technically, it shouldn't be used at all. You shouldn't be blowing figures, shouldn't be rolling negative equity into other cars, because that's not the way the finance company should be dealing with it, and certainly not the way the dealership. It's done regularly, and it's been done, and it's incorrect. And what it does for customers, it just gives them a complete false sense of what their financial exposure is. They don't know, it is genuine, like smoke and mirrors, and they go further down and go down this kind of rabbit hole. They don't know, exactly what they're exposed to financially until their second deal, their third deal, then they realise they just can't get out of that. So, and then they start getting charged higher interest rates and all the rest of it. So it's a kind of vicious circle. So really, the thing is, if you're in negative equity, you really need to just deal with it at that point. You shouldn't be rolling it into any other cars. And if the dealers have done that to you, then again, they're not following the Financial Conduct Authority, the regulations. They're not following the rules, and that should really be dealt with. So there is recourse for that as well. So first and foremost, don't get into that situation, and if you are in it, don't fall into the trap of the negative equity. You know, you'll go nowhere. It's a kind of downward spiral, and you know, you're really going to have to deal with it at some point. So I just wanted to make everybody aware of that. That's another big area of mis-selling. Now, we spoke previously again about the excess mileage, so you can imagine then if you've got excess mileage charge compounded with negative equity, you're really getting big problems. You know, we see stuff from 3,000 to 10 to 15,000 pound, you know, problems of finance, and people just can't get themselves out of it. And it's, you know, it's been at the dealers maybe allowing that to happen. They're experienced, they know where they're going with it. They're quite happy to operate this. You know, we talked about it earlier on, like the rouge, and it's an illusion. You know, they go in, it's already a strategy they're working to, because they know that, you know, they can manipulate the figures, do what they need to do. The customer very often is just at the mercy of the dealer with regards to what finance arrangement they're getting and how it's going to work out, etc. They don't really understand, and it's not explained to them all the ins and outs, who owns the car, what the final costs are, what the financial exposure is. So it's something that really shouldn't be going on. So, you know, if it's happened to you, let us know. You know, we can fix that for you as well. You know, you can get recourse, you can get money back, and you can challenge the finance companies on it, certainly the dealers, etc. So by all means, you know, get in touch with us. We'll do everything we can to help. But first and foremost, I'd rather that people are aware of that and don't get into it in the first instance, and then you've not got any problem to deal with. So thanks for listening to us, and I hope we've not insulted you with the cars to give you that explanation. But it's a bit like you're in the dealership and everything else. You know, words are words. They can just go over your head, and it's hard sometimes to just understand how it actually came about. So we've tried to maybe identify how that thing sneaks up on you and it becomes a big problem. It's kind of hard to deal with at the end. So if you want any help with that, you can just get in touch with us. But again, thanks for listening. Thanks.